Hi everyone, welcome back. This is Shivam from MTM. In today's video, I want to give an update on Indian markets and spend a little more time looking at the broader market, specifically mid cap and small cap indices. Majorly, the broader market is still fairly mixed. We haven't seen a decisive breakout in the large caps, mainly Sensex and Nifty, while the mid and small caps have been slowly inching up without the confirmation of the large caps themselves. So but I think we have reached a point where risk management has become even more important. So let's first quickly take a look at the charts of Sensex and Nifty, and then I'll get into the market breadth and the small cap indices I'm referring to. Starting with the Sensex, the index of top 30 stocks. So initially it bottomed out in late March and the actual low was made on 2nd of April, followed by a quick rally to the highs of 79,400, followed by again a downward correction during the months of May and June, again up down action till it tested this resistance zone again in early August, but wasn't able to clear it. Now if you join these lows from June as well as the July low, you'll end up with this rising trend line, which I would consider as a final support for this structure to develop. So if this is still an ascending triangle kind of structure, then I think this trend line should hold. Otherwise there is a risk of further correction from here on. Similarly in Nifty, so you can see my wave counts have been, trying to force fit bullish counts, multiple 1-2s and 1-2s. While it is not wrong, if you check the retracement of this last part, yes, it's well just at 61.8. So from that point of view, it still fits. But at some point, we need to give more importance to the actual structure and not just the Elliott wave preferred count. So here as well, you can see there is a possible rising trend line that we can draw, and till it is above it and eventually manages to take out this resistance, that would be a bullish case for the Nifty as well as the overall market. And a break of this trend line is actually gonna be bearish and further correction can take place. So in my view, I think the alternate count here would be something like this, where this entire thing is a part of larger wave to flat kind of structure. So that is going to be an alternate count for now. So let's see. So before moving ahead, we will also take a look at the weekly charts. So what you can see here is momentum indicators slowly trying to inch up, while the price has not been able to recover above the 40-week EMA, especially for the Nifty. You can see how far it is from the highs, the previous highs. And for Sensex, again, this has also not been able to clear the 40-week average. So why 40? Someone asked in my previous videos. So it's closest to the 200 period average on the lower time frame. So if I look at 40 week versus 200 day, the values would be similar, right? So now coming to the mid cap and small cap indices. So in my previous video, I mentioned that there is this wedge like structures developing in mid cap and small cap indices, which I was trying to ignore because the large caps were yet to break out on the upside. So this is mid cap 150 stocks, and then there is something called as small cap 250, and there is a sum of both the indices which is named as mid small 400. So all these names just this mention the segment as well as the number of stocks in that particular index. So these are the broad market indices that we need to look at. So mid small 400 is actually already crossed this previous 24 high, but the structure is within this contracting trend lines. So while I was trying to ignore this earlier, I think now is the time we pay attention to it, because the large cap indices have still not broken out. And if these structure end up looking like a distribution or a distributive pattern, then there is a serious risk of some more correction all around the market. So coming to small cap 250, now this is where I got interested into this view. So this is the resistance zone from previous highs made 2 years back in September of 2024. Since then, it has been below those highs and been in an up down cycle. It has kind of touched that zone, but the momentum is clearly slowing down, and the price is within a rising wedge kind of structure, which some people can also call as an ending diagonal in terms of Elliott wave. So if you look at the momentum, the speed has been slowly slowing down, and specifically on rate of change indicators, you can see negative crossovers like this happening here. So even if there is a normal pullback till up to 40 week, it would still be around for 5 to 6% of correction, which at an index level is quite big and can cause more damage in stocks. So at this juncture, I think it is going to be better to see what the price does and whether or not this resistance is cleared right away or after a small correction to the 40-week averages. So in either case, it would make sense to for one to focus on risk management in the near term and let the price confirm which scenario is playing out. Let's also take a look at the ratio chart versus the Nifty itself. So we have been the small cap is outperforming since this year's low. In percentage terms, this has been around 25% of outperformance from the actual low in the ratio, which was around 27th of Jan. So if I were to draw trend lines around this range like this, or simply mark the previous high as a resistance here like this, then the ratio itself is also at a multiple resistance zone. Actually, we can also use small cap 100 index for the ratio, only because that index has more history and we'll be able to see more data on the chart. So when I plot one small cap 100 versus Nifty, you will actually be able to see downward sloping data that moves inside this two trend lines. Let me draw those. So the very big downward sloping channel we can see on the long term chart of small cap versus the Nifty ratio chart, which has now reached this top end of this falling channel or falling trend line. Now the ratio is also hitting this resistance, which would mean the outperformance from small caps can end soon. So the only segment which is doing well in the market, if it also starts to weaken, that raises some question. So the structures are not outright bearish yet, but definitely at a point where we need to discuss risk management levels. Now, what would be the other case is if these divergences have to resolve on the upside, then the large cap indices would have to actually join on the upside rather than expecting correction in the smaller or the mid caps. So in that sense, the signal would come from the large caps themselves. So if Nifty and Sensex clear above their respective resistance zone, which is these April highs, I think the level is 25,600 for Nifty and around 79,400 for the Sensex. So if the large caps actually start to improve, then I think the divergence would resolve on the upside. So both scenarios are open because the all the segments stay range bound for now and structures are not outright bullish or bearish. So there is no point predicting, but yes, it is a point of caution. Lastly, I do want to focus on the internal breadth of the market. So all these indicators are plotting what percentage of stocks are above their respective moving average for a particular index and any time frame. So if I've plotted percentage of stocks above 20 SMA above Nifty, which means for Nifty, it means that what percentage of Nifty 50 stocks are trading off their 20-day moving average. So 20 days is a smaller period, best used for smaller view. So for example, you can see this overbought readings working in the near term and zones around this 20-25 level working as a support on the downside. Now, because I'm referring to slightly larger period, it would be better to take a look at least 50 period moving average. So here you can see less than half of the stocks are trading above their 50-day averages. So let me plot this line at 50. So yeah, it just broke below 50. Now, once we look at other indices, that gives us a better picture. So if this was large caps, then what are the mid caps looking like? Let's plot the 50 line here as well. Mid caps are slightly better. Still more than half stocks are trading above their 50-day averages. Now, small cap is where I think the most caution has to be taken. Let me plot the other line again. Yeah, so it has broken below 50 and less than half of the stocks are now trading above their 50-day moving averages. And what concerns is that the initial thrust up here, almost 92% of stocks were able to hit, close above their 50-day averages, and post that it has been declining. So all this action post the month of May has been on the back of falling bit. So less and less stocks have participated in this later part of the rally. Now, whether this will end up being just a consolidation or this whole wedge actually plays out and we see some kind of correction here and then only a pickup, that is the whole question. So I think it's best to let the price give us that hint whether it breaks higher directly or after a correction. So to conclude, I would say if these higher lows or this lower trend line holds on the smaller and mid cap indices and we see a pickup in the large cap indices, it would mean that the bullish scenario is actually playing out and the divergences will resolve on the upside. But if this trend lines were to break, basically higher highs and higher lows formations were to break on the broader indices, it would actually be risky because the large caps are not doing anything anyway. And the one segment that is holding, if that also starts to weaken, the correction can actually accelerate in the near term. So thanks for tuning in. Ultimately, price will tell us which scenario is playing out. So I'll see you in the next one. If you have any questions, do let me know.